The top 10 greatest investors in the world. Without any doubt, the greatest investors are the rock stars of the financial world. The greatest investors have not only achieved success for themselves, but they have also helped hundreds and thousands of people to achieve similar returns. Every great investor has a philosophy and strategy that they follow and achieve their targets. Some of them have made new and innovative ways to invest, while some have chosen securities almost completely by instinct. Well, their strategies help to differentiate them from other investors. These successful investors made significant amounts of money by sticking to the basics and their solid investment strategies. The only common thing among these investment gurus is their ability to constantly beat the market with an incredible track record. Are you excited to know about the greatest investors of all time? Continue watching the video as we are going to talk about the top 10 greatest investors in the world. Number 10. Michael Steinhardt. This investor was named as Wall Street's greatest trader in a 2014 Bloomberg article. Michael Steinhardt's investment strategy is based on several aspects of investment. It includes bond options, stocks, and currencies. His record still stands out on Wall Street with his 24% compound average returns annually through his fund, Steinhardt Partners. For over 28 years, this record is more than double of the S&P 500 if it is compared to the same period. Steinhardt is credited for the long term. However, he invested in the short term like a strategic trader. Michael Steinhardt also suggested things for investors to stay grounded. His famous quote is that, "Make all the mistakes in your life early." The more tough decisions you take early, the fewer errors you will make in the future. He also quoted that investors should not go for small investments. He believes that the money you are putting at risk then also ensures that the rewards will also be high and justify the time and effort you put into the investment. Number 9. George Soros. George Soros is the man who is famous as the person who broke the Bank of England. He has risked a whopping $10 billion in just one trade and shorted the British pound. But he has made more than $1 billion from this trade. Also, there are estimations that the total trade was around $2 billion. Soros is known for running his quantum fund. This fund has generated over 30% of the average annual return while being the lead manager. His focus was on the broad macroeconomic trends and turning them into high-leveraged plays, commodities, and bonds. It would not be wrong to say that he is the odd man out among the greatest investors. Because he does not have a clear strategy, on the other hand, it was a more speculative approach that came from his gut. He was also known as a genius for his unique investment strategy. Number 8. Peter Lynch. Peter Lynch made his name on this list of investors by the management of Magellan Fund for more than 13 years. During this period, his assets under management increased from $20 million to more than $14 billion. Most importantly, Lynch has beaten the S&P 500 index in 11 of the 13 years while possessing an average annual return of 29%. He is also the author of some amazing books on the field of investing, such as One Up on Wall Street and Beating the Street. Moreover, Lynch was famous as a chameleon because he always tries to adopt every investment style that was working at that time. However, when it comes to choosing certain stocks, he gets confused or even stuck on the things that he can easily understand. Lynch also has his fundamentals when it comes to selection. His famous saying for investors is that you should have a clear explanation of why you are to make a purchase. Number 7. Carl Icahn. Well, Carl Icahn is an investor on our list who has a different approach, and he has taken some different strategies during his journey of investing. Icahn was known as a corporate raider in the late 1970s and early 1980s. This is due to his approach because he analyzes a company with a poor management system and tries to get enough shares to be on the board of directors. After getting into the company, Carl's approach is to replace the senior management to get better results for the company with proper management. He also faced a lot of controversies in the last 30 years, but also gained some exceptional results and success. While not focusing on value investing, he focuses on companies that are not performing well or are undervalued. With hostile takeovers, Icahn got popular for hitting Icahn lift, and he invests in things that he can change easily after taking the charge. Furthermore, through Icahn Enterprises, he grabbed a return of 14.6% in 15 years from 2000 to 2015. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Number 6. John Templeton. John Templeton, the creator of the modern mutual fund. He came up with the idea due to his own experience. He bought 100 shares of each company that is trading on the New York Stock Exchange for under $1. In total, he bought 104 companies for an investment of $10,400. After 4 years of buying these shares, 34 companies went bankrupt. However, he was still able to sell his remaining portfolio for $40,000. From there, he gets the idea and understands the power of diversification. Because this is the idea when you invest in the market as a whole. Some companies will gain and some will fail. This is the reason he was known as the ultimate bargain hunter. John's approach was to find the stocks of the company that are neglected because he believes they can be the best value stock. That's why he searches for companies globally when no one is searching for them. Well, with his approach, he was able to get a return of over 15% annually. Number 5. Bill Gross. Bill Gross is the man who is known as the King of Bonds, or the greatest bond fund manager by many. Being the founder and managing director of the PIMCO Pacific Investment Management Company, he possesses over $1.92 trillion in fixed income assets. His major emphasis is on purchasing individual bonds with an investment style that focuses on the overall portfolio. According to Bill, a successful investment in the long run is based on 2 factors. First is the ability to correctly formulate a long-term outlook, and then having the correct structural composition to take benefit from the outlook. His approach for a long-term investment is to go about 3 to 5 years, because this long time frame can prevent the investors from getting trapped in the whiplash of daily progress. Number 4. Benjamin Graham. Benjamin Graham is known for being a financial educator and investment manager. He is also known as the mentor to Warren Buffett. Graham is also attained and considered the father of value investing. He has written the most influential and famous books in the field of investing, including Security Analysis and The Intelligent Investor. Not only does he make huge amounts of money for himself, but he also teaches his clients the strategies without taking much risk. That's because he used financial analysis for a successful investment in stocks. If we look at his portfolio, his approach to investing is that he firmly believes in fundamental analysis. In addition, Graham seeks companies that have a strong balance sheet, decent profit margins, nice cash flow, and low debt. With his amazing strategy, Graham got an average return of 20% in the time frame of 20 years, successfully beating the market return. Number 3. Philip Fisher. The next greatest investor is the father of investing in growth stocks. Philip Fisher started his investment firm in 1931, Fisher & Company. He gets astonishing returns for himself and also for his clients in his 70 years of career. His investment strategy is also focused on the long run. One of the most famous stocks was Motorola, which he bought in 1955 and held until his death. In his investment approach, he created a list of 15 characteristics that should be focused on before investing in a stock. He also focuses on 2 major categories. The first is the characteristics of the business, and the second is the characteristics of the management. Additionally, Fisher focuses on companies with high profit margins, a leading position in the industry, high return on capital, etc. Number 2. John Jack Bogle. John Bogle, the founder of Vanguard Group, is also considered the greatest investor of all time. The Vanguard Group is one of the biggest mutual funds with over $7 trillion in assets. That's why he is the most famous mutual fund manager and the creator of index funds. He introduced the index fund Vanguard in 1976. Well, he likes to keep his style of investment simple and easy with some basic rules. His investment strategy is based on investing with a low-cost index. Bogle's approach is to capture the market return by investing in broad-based index mutual funds, and those that are characterized as low-cost, less turnover, passively managed, and with no load. Number 1. Warren Buffett. The last investor on our list is the most famous and greatest investor of the modern era, and even in history, Warren Buffett. And that's because he was the 6th richest person in the world in October 2021. He started different investment jobs with his earnings, which are about $12,000 per year. Well, he is the largest shareholder in his own company, Berkshire Hathaway. Buffett follows the philosophy of Graham Benjamin, and he looks for stocks that have prices under their intrinsic value. He mainly focuses on the three aspects of investments that contain consistency, discipline, and expected duration. Buffett possesses the ability to beat the market return consistently with his amazing investment strategies that are based on discipline, value, and most importantly, patience. Throughout his successful journey, Buffett has enjoyed returns of about 21% per year for the shareholders. And this return is double the S&P 500 index of just 9.7% annually. So, these are the top 10 greatest investors in the world. We hope you guys enjoyed the list and gained some insights into how successful investors go with their strategies and make money. Don't forget to share your thoughts with us in the comment section. As always, thank you guys for watching.